What's up, traders? Today we are cutting straight to the chase on currency pairs. If you're trading Forex, this is your starting point. Every trade involves two currency pairs, one you buy and one you sell. That's a currency pair. Think of Euro USD. It tells you how many US dollars you get for 1 euro. Simple, right? The first currency is the base, the second is the quotes. Now, these pairs fall into three main groups. Number one, majors. These are the big leagues. They are always involved with the US dollar, like Euro USD, GBP USD, or USD JPY. They are the super popular, very active, and have the lowest trading cost. Perfect for beginners, smooth moves, and easy to understand. Number two, minors or crosses. These don't include the US dollar. They are made up of two major currencies like Euro GBP or Euro JPY. Still active but a bit less than the major pairs. Number three, exotics. This pair a major currency with one from a smaller economy. Think USD ZAR, US dollar versus South African rand. They move wide, cost more to trade, and comes with more risks. If you're new, stay away from these. Stick with the majors. What makes this pair moves? Mainly big economic news like inflation data or central bank interest rate decisions. Always keep eyes on the economic calendar. It tells you when those major events are happening. So here is the key takeaway. If you are starting out, start with major pairs. They are stable, liquid, and help you learn without crazy volatility. Focus on understanding them first. Don't try to trade everything at once. Understanding currency pairs is fundamental. Master this and you are off to a solid start in Forex. Want more clear insights like this? Hit the subscribe button, and if you're serious, join my Telegram group. The link is always in bio. Until next time, stay sharp, stay disciplined, and keep growing.